Welcome to Primary Markets TV, your insight into newly issued securities across the fixed income and equity space. I'm Ruth Emery. Joining me today is Adam Coons, a certified financial analyst and portfolio manager at Winthrop Capital Management. We're going to be talking about digital bonds. Adam, welcome to the show.
Hi, thanks for having me.
So we're starting to see an increasing number of digital bonds being issued. So banks are experimenting with bonds on blockchain. And in April, the EIB issued and settled its first ever digital bond. What are the benefits for issuers and for buyers?
The benefit at this point is transparency for primarily the buyers. So they get to see transaction detail very quickly and it's verifiable. And that's the key word here, is that all of the transactions and who owns the bonds are verifiable. Mm-hmm. And then additionally, it is speeding up the settlement process. And most people are unaware of this, but, the fixed income market is definitely, an old traditional arcane, process. And so it is difficult to settle bonds. It is a large process. There are large teams in the back office that settle fixed income securities. So in essence, this would speed that up and really just kind of make it a lot simpler.
And what about the costs involved with digital bonds compared to paper bonds? Will it become cheaper?
Yeah, the idea is definitely that the transaction cost and just the overall, issuance process will be cheaper because settlement will happen in a more streamlined and quicker way. So both the issuer and the investors should benefit from lower costs in the long term.
And what are the downsides or the risks with digital bonds?
Like anything on the blockchain right now, it's new. Mm-hmm. And different countries' security regulators have not really set the rules and guidelines for a lot of these products. Right now, the SEC really has nothing here in the US to deal with this, which is why you're not really seeing issuance in the US. When you look at Singapore and then other places in Europe, they have begun to set laws and regulations that are help guiding investors. But I think the biggest thing is just the uncertainty about, how this market will kind of unfold over the coming years.
And what proportion of bond issues do you think will be digital in, say, a year's time? How quickly will the market become digitized?
I think it's going to happen slowly, and that's really going to come down to, once again, regulation. I think we're all aware of the fact that government regulators are a bureaucratic bunch, and so it's going to take them a while to agree. In the US, our bond market is 50 trillion. The US corporate bond market is 10 trillion. And we're talking about, this latest EIB issuance was 200 million. So right now it is a very, very small piece. So I think it's going to take some time for this to accelerate and be adopted widely.
And what regions do you think will lead the way when it comes to issuing digital bonds?
I think it's going to be Southeast Asia. They're just in general, when you look at both technological and regulatory environments, just more advanced. They're a little newer to the game in general. So they're adapting to the changes a little more quickly than kind of the old European and US markets are doing at the moment.
And what are the pros and cons of digital bonds for investors? Is there more potential to reach retail investors, for instance?
Eventually. I think it's kind of the same thing you see in cryptocurrencies, is that you see this large, Bitcoin at 46,000, but you can fraction that down very small amounts. In the fixed income markets, fractional shares are not a thing. And so a lot of times the limitations for retail investors to buy individual bonds is that they can't be cut down into small increments. So this will allow that. So that will help, retail investors purchase, smaller pieces that may fit their portfolio better. The downside, though, is that because this is a newer, smaller market, and if you do have a lot of retail investors, what that may do is crowd out institutional investors, which means these bonds will be less liquid.
Okay.
We really rely on the institutional buyers who buy in large chunks to kind of help liquidity. So if a large institution knows they can't buy more than, a few 100,000 of a bond, they're probably not even going to look at it. So those will be the limitations and cons. In the short term is that the liquidity will be low.
That's been brilliant. Thank you so much for your time today, Adam.
Thank you for having me.